It's a fairly packed agenda. And to start us down on our path, I have the pleasure of introducing Commissioner Brian Quintenz of the Commodity Futures Trading Commission. Along with sponsoring the CFTC's Technology Advisory Committee, Commissioner Quintenz has overseen the creation of cryptographic tokenized commodities, the listing of Bitcoin futures contracts, and his committee has explored the evolution of cryptographic proofing mechanisms. Commissioner Quintenz is going to speak about what the future holds for crypto and how he sees cryptocurrency fitting into the investment and regulatory ecosystem with respect to privacy. So thank you very much for joining us today, Commissioner, and you have the floor.
Wonderful. Thank you all. Let me just ask and confirm if I can be heard.
Yes, we can hear you.
Okay, wonderful. Thank you. So first of all, I'd like to thank Fidelity for having me here today. This is the first virtual keynote that I've given in the new environment that we have. I've had the pleasure of participating in a number of virtual conferences. And in preparation for today, I was debating about whether to do what I normally do when I give a keynote, which is to write out a very eloquent speech of profound thoughts that can be published and read in perpetuity by thousands and millions of people, or to give, I'm being very facetious, if any of you actually look at how many times our commissioner speeches have been downloaded, or to give a little bit more, not necessarily off the cuff, but a set of informal remarks that represent, I think, a lot of my thinking, both as a regulator and as an American, with regard to this fascinating technology and innovation that we are seeing that can advance so many interests of consumers, of privacy advocates, of regulators. And so let me first start off, as I normally would in any formal speech, by saying that the views I'm going to express to you are really only my own. They don't represent the views of other commissioners or the chairman or the agency or the staff. We as a commission operate on a majority basis, and therefore we can only take action with an affirmative majority. So any comments by individual commissioners are really only their own views. That being said, I've been so pleased to sponsor our Technology Advisory Committee over the 3 years that I've been a commissioner, and have found that the discussions around technology innovation in our markets, but in particular cryptocurrency and cryptography, have really been embraced across all of the commissioners with whom I'm fortunate to work, as well as the staff at the agency. And I think hopefully what you may have found is that the CFTC is a really forward-leaning regulator when it comes to technology. We are adamant about taking a technology-neutral approach, and our rules actually allow for the self-certification of contracts by our designated contract markets, the DCMs, or the exchanges, which puts innovation squarely in the realm of the private sector. And I am a huge defender of that, because I think that, I don't want to say this about me or certainly about my fellow commissioners, but when you're in a role like this, it's hard not to think about what a situation may look like if you are called in front of Congress and asked to answer for a specific breakdown or a specific event, and what you did or what you didn't do to contribute to that. And the listing of new products, if it was actually up to regulators, has the potential to only be viewed as a downside. There is no incentive from an individual regulator's perspective to approve something that's cutting edge, as opposed to waiting and seeing and studying, and in which case a lot of times the private marketplace vastly outpaces the regulatory structure. So I think I've been fortunate to work at the agency during a time where we've seen the listing of cryptocurrency derivatives, Bitcoin derivatives, and what it's meant for the agency in terms of its interaction with technologists and innovators, especially in this space, as well as the development of our lab CFTC office that is now headed by Melissa Nettram, and before that, Dan Gorfine, I think both of whom you may be hearing from later, and how much value they have added to the agency's awareness of this topic specifically. So with all of that, let me just get into some of my thinking around privacy and cryptocurrency. And I think as a threshold issue, I think we can all look back and maybe challenge the idea that while Bitcoin may have been thought of as a privacy-focused innovation, and I think there is certainly reference to that in Satoshi's white paper, the evidence has proven to be quite the opposite. That information that is distributed among blocks, that is verified and that become immutable, leave a trail and a trace. And we have seen cases that have utilized that line of data and its interaction with the traditional financial system to hold wrongdoers accountable. And so, I think we need to understand, that when we talk about broad things like privacy and cryptocurrency, we actually need to talk about much more subtle examples, whether they be individual cryptographic products or cryptocurrency products, and what we really mean by privacy to begin with. Do we mean allowing others to have our data but not necessarily use it? Do we mean allowing it to be used in a consent with which we agree? Or do we mean that we'd rather not it be used, but if it's used in a way that prevents significant wrongdoing or harm, in some cases not from a cryptocurrency perspective, but from a homeland security perspective, potential life-threatening situations, seems as though there's been a consensus that it can be tolerated. So when we're looking at the privacy space specifically, I think we all need to focus on, well, what do we mean? What are we advocating for? And what is the give and take there? I think Deanna really described well the fact that, a lot of things in life have trade-offs. Certainly as a former investor, I realize that. As a regulator, I realize that. So from a number of different perspectives, let me talk to you about how I view privacy generally. I'll talk about it from being a regulator, from being a consumer, from having been an investor and maybe putting myself into the shoes of more of the people that are on this participating today, and then as an American and what that means. From a regulatory perspective, the agency, since it was created in the 1970s, and its precursor agencies back into the 1920s, have always had what we call Section 8 data. Section 8 is a paragraph of the law that requires us to keep confidential, sensitive information around trades. And we can only reveal that in very, very limited circumstances. And I can tell you from having been at the Commission for 3 years, the agency takes nothing more seriously than the protection of sensitive trading and market data. We have a number of protocols and procedures designed to protect that, and as we should, because if something happens where that information is made public accidentally, we end up losing the trust of those we regulate, we end up losing the trust of our registrants, and we can compromise the interest and use of our marketplaces. And for some who may not be as familiar with the CFTC and the derivatives marketplace compared to our sister regulator at the SEC and the equity and security marketplaces, the derivatives marketplace always evolved as a risk transfer and a hedging marketplace. It is a critical component of our economy in order to transfer risk from those that are exposed to commodity risk to those that are willing to bear that risk. And that hedging tool, that risk transfer mechanism, has worked so well to be able to allow for the growth in industries that are focused on commodities and marketing operations, merchandising operations, and even into financial products like credit hedging and interest rate hedging and foreign currency hedging, which is, I think, one of the reasons why we have such a robust international, diverse marketplace that we have today. But another way I'd like to talk about this is, from the perspective of just a normal everyday consumer, like many of us all are. And from that perspective, I think, we saw some polling information that was very interesting. But I think we have to ask ourselves, what is it that are we demanding as consumers? Are we demanding privacy above all else, as opposed to what I think most people demand in the marketplace, which is convenience? And when people are demanding convenience, they may want privacy, but they may not be paying for privacy, or they may not be willing to lose the benefits of convenience for privacy. And I offer that with a few concrete examples in mind. The first of which was when I was at a hedge fund before coming to the agency, the CFTC. We were a financial focused hedge fund, and we were looking at the banking sector. And I remember examining kind of a case study of a bank that was a startup bank, and its whole thesis was that it didn't have to compete on price. It didn't have to compete on the interest rate it offered on deposits if it could offer the benefits of convenience. If it could be open, 18 hours a day, 6 days a week, as opposed to 8 hours a day, 5 days a week, and closed for an hour at lunchtime. And the result was profound. The result was that those consumers much more significantly valued convenience as opposed to price. And I think we need to ask ourselves, in the context of privacy and public policy, what the trade-off is between advocating for more privacy, potentially at the expense of more convenience. Are we willing to not use some of the conveniences of big tech because we don't like what they do with our data, or that they have our data? And I think that that's something that we're going to have to see, and it may take a large and significant event in order for that conversation to really crystallize and materialize. But I think if you look at the culture in the United States generally, I think the innovations in cryptocurrency are going to be the result of the same forces that produce the innovations across the economy, which is what consumers demand. And from where I sit, I see that much more focused on convenience. And another case in point about that is, even if you look at the differences in the landscape of cryptocurrency products, or cryptographic assets, I think I should say, the privacy-focused coins haven't really been adopted by the retailer community and the transaction community in order to be used as methods of payment or a medium of exchange. And I think that there could be a catch-22 there in terms of AML compliance and know your customer issues. But where has that innovation really taken hold? It's in the Bitcoin space, and it's in the Ether space, and the transactability and the store of value can be used for actual purchases. So consumers, to some degree, are already expressing their preferences there. The third area I wanted to speak about was as a potential investor, because I think all of these things, these kind of four prongs will really go together in shaping, where we see the conversation around privacy going. I'm not necessarily advocating, that because I'm a consumer and I care about convenience, I therefore don't care about privacy, because that's obviously not true. And I think all of us, would probably put ourselves in the same boat. But when you combine all of these things together, I think it may give a direction about, well, what needs to happen if we want to focus more on privacy. And from an investment perspective, I mean, I follow the crypto side of Twitter very closely. It's been incredibly educational for me, but I also see it highly focused, and I don't think inappropriately, on investment returns associated with whatever asset is being owned by the person or group that is articulating a view. And from that perspective, I think, investors probably want their cryptographic assets to be broadly adopted within the existing financial system and by institutional investors, which I think, brings with it the existing infrastructure around a lack of privacy from the perspectives of AML and KYC. And I think investors probably also want, to see the assets they hold have more usability as payment mechanisms. And I think we've had a very interesting event occur within the Office of the Comptroller of the Currency, who has started to advocate around financial institutions being able to hold in custody digital and cryptographic assets, as well as the acting comptroller's interest in bringing in payment focused businesses as banks and chartering them as banks, because there's nothing necessarily in the regs that require a banking institution to take deposits as a prerequisite for being a bank. And so as you kind of combine those things, I think we'll start to see a few things tying together, which is which ones are the most usable, and therefore which ones get roped into the existing financial system, and then how does that impact the privacy capabilities of what's left over, what can't be brought in to the existing system because of that. And lastly, I think I'd like to just express my view as an American citizen, because I view freedom as incredibly important. I think our former chairman Chris Giancarlo, in one of his speeches, said something I'll always remember, which is the right to transact freely in the financial marketplace is part of freedom itself, and I firmly believe that. And I think there is an open question, and the balance is tipping away from the historical balance about being able to transact freely in the financial marketplace and in the marketplace generally. And that isn't necessarily to mean what we can buy. It's what we can buy with what, and is our purchase of that product protected in a way that can't be used negatively against us. And as we look at the environment in which we're finding ourselves, I think a lot of information is being used to create assumptions that then translate into accusations, and that can ruin reputations. And I think the more we can be focused on the freedom of transacting privately, I think the better. Lastly, as an American, I think of first principles, which is that if there is a standard already that has anonymity, like cash, then we shouldn't necessarily view other things that are like cash as anything different. And I think that ultimately leads into the second part of the conversation I'd like to have, which is where I see the regulatory structure going around cryptocurrency specifically. And I think that there are two parts to that. The first is kind of the insertion of cryptographic products into the regulated environment. The CFTC has a very principles-based approach to regulating. I think there are some technology innovations that may require a few tweaks to accommodate how we view them, how we verify them. But overall, I think our regulatory structure is technology neutral. And I think it's mostly a matter of trying to get that green light of understanding and comfortability in order to put them into our existing regulatory structure, which we have done and are doing. We are allowing for Bitcoin to serve as margin and collateral for physically delivered futures contracts. That means there has to be custody in a way that complies with our custody rules for consumer protection purposes and customer funds protection services, which is probably the most important regulation that we have on our books, because without the protection of customer funds, you lose the ability to ensure the integrity of a hedging transaction, which gets back to my point about the importance of the hedging marketplace in the economy and how important it is to preserve that integrity. And I think we've been focused on that significantly. We've been focused on, do we need to update our rules to accommodate these products, or are rules sufficient for that? But under no case do I see the direction the Commission is going with the products it has been presented with by the private marketplace as taking a negative view first, only with further study. I've viewed the agency as having a very open mind and wanting to get to a yes on involving these assets in our existing regulatory structure. The second aspect is to not necessarily focus on cryptocurrencies specifically, but to focus on the technology. And I see two areas there that I think are really going to be fascinating. The first is something that we've heard at, I think, our February meeting of the Technology Advisory Committee, and those are all archived and webcast, and I would recommend that all of you view them. I think they're incredibly educational, and they can be complicated, but they're designed to be targeted at my level of understanding. So hopefully that means all of you can understand them very easily. But in that meeting, we had a presentation by a group that was advocating using multi-party computation and zero-knowledge proofs for custody purposes, and to go through those mathematics and to understand how that can actually benefit and make more secure and with greater integrity, our custodial verification and practices. I think is going to have a profound impact on the custodial marketplace, and that's something that we're interested in exploring, and I'm excited to see more advancements there. The other side of that is something that I think we as regulators could do a better job of using that technology ourselves. And I know enough to think that this is a possibility, but not enough to know how to do it, or maybe not enough to know, what the pitfalls of it would be. But in a lot of the enforcement cases that we bring against very traditional registrants, sometimes what we find is a lack of record keeping that inhibits our investigations into an individual's potential wrongdoing or the entity's potential wrongdoing. And what we don't do a lot of is direct examinations, for those records. We do some, and I think that that's an important part of oversight. And the National Futures Association does plenty, although they usually do targeted exams towards a few different priorities. But if there is a way to be able to use a multi-party computation or a zero-knowledge proof structure so that we as an agency could actually verify that a registrant is keeping information like it's supposed to, without having the risk of that information, in its transmission to us to be verified, and having the obligation and the work requirement involved in going through that information, I think we can much better protect the integrity of the marketplace by ensuring those records are kept. We can ensure the integrity of that information by reducing its transmission risk, or in fact eliminating it. And we can save time from our own perspective in terms of needing to go through a lot of that information ourselves to verify that it's there. And the last aspect of the technology that I'm interested in is the whole advent of the distributed marketplace. We've seen the prediction marketplace kind of come up and spring up, and I think that poses some problems and challenges with our existing regulatory structure. As some of you may know, events are actually listed as commodities in the Commodity Exchange Act. So therefore, any contract on a future event qualifies as a futures contract and needs to be listed on a designated contract market. And we have some no action relief that allows a limited number of marketplaces with a limited number of participants and a limited amount of loss to exist. But I think we also need to ask ourselves, is that truly what Congress meant when they talked about the public interest? What are we taking away from the public interest by preventing those marketplaces from flourishing more successfully? And there are a number of things that we have been seeing from the private sector to walk that line between things that may more traditionally be gambling on a specific event outcome versus an event outcome that truly could be used for hedging purposes and risk transfer purposes, like we've always seen in our existing marketplaces. How we can think about a distributed marketplace within the confines of our designated contract market, our exchange, regulation system, I think is going to be a big challenge. That may not be something we can solve without further input from Congress. I think given the way that distributed markets can use anonymity and consensus and exchange and how those entities, who responds to what regulation requirement, is going to be a very complicated thing for us to address in the future. But I think it's a conversation we're going to have at some point, given the ease with which these marketplaces can evolve and the success with which they have been able to evolve. With that, I believe I'm at the end of my time. I hope that this discussion was a little more interesting than a written speech. Maybe not as eloquent, but certainly represents some views that I hope can strike a balance with all of you in terms of my own thinking about where we go as a country, as a regulatory community, and as a private marketplace in the discussion of privacy and how it's balanced within the cryptocurrency area. And with that, I'd like to thank all of you for participating today and thank Fidelity for having me.